It's brittle.
Brittle?
Yes. I think you put it very well when you pointed out the US consumer confidence data yesterday, which fell very sharply, much more sharply than expected, commensurate with a material slowdown in consumer spending. Now, consumer spending is about 3/4 of economic output growth in the United States. If it were to slow down as much as the confidence data implies, that would mean more than just 1/4 of negative growth. That would mean an all-out recession. It would mean something much worse than the financial markets are currently anticipating.
And it's all being kicked off by the problems in the housing market. Home prices plunged by record levels. We had figures out yesterday. No major city immune from those big falls.
That's right. This is something that has spread quickly like a disease across the United States. No major city is immune, and no particular area. There had been, of course, previously pockets of resistance, particularly in the Midwest, because farm prices were strong, because of course farms were being bought up for ethanol production, etc. There is nowhere to hide anymore. What's the problem? The problem for the central bank in the United States, and indeed increasingly globally, is that they are concerned about inflationary pressures. We know about high oil price, we know about high commodity prices, higher food prices, and yet at the same time economies are deflating, house prices are deflating, stock markets are deflating. So what do? Do they raise interest rates because they're concerned about inflation, or do they cut interest rates because they're frightened about deflation?
And what's really interesting about what's happening on the markets as well is that they seem to jump on any slight bit of good news, and so we saw the markets rally yesterday. And I was just looking at CNN.com/World Business yesterday. This was the headline yesterday: World markets surge on US housing data. The top story, forgive my little squills at the top. Today, US home prices brace for dismal spring. Yeah. And that sort of thing is happening all the time. And that's one of the reasons why we're seeing these fluctuations, because they're jumping on anything.
Well, that's right. There are two things to say here. Firstly, in the stock market, people who are of bearish persuasion, who look at all this economic news and think, oh goodness, share prices are going down, have to contend with the fact that the Federal Reserve is now taking radical action to try and preclude this situation from getting any worse. The stock market is a forward-looking indicator. It is anticipating an environment at some point in the future. We're now at levels which are commensurate with quite a sharp fall in profitability. In order for the stock market to fall further, in my view, significantly further from here, we have to tumble out of where we think at the moment we are, US recession, slowdown in Europe and the United Kingdom, strength in Asia, into a global recession. That is not our forecast, but that is the risk.